Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Ryan McCormack. He's a QQQ equity ETF strategist at Invesco to discuss Nasdaq-100 revenue, earnings, and dividend growth outperformance over the last decade. Ryan, it's great to have you with us as always. And before we get into outperformance, let's take a look at what the Nasdaq-100 has done year to date.
Thanks very much, Jill. It's great to be here. Kind of our weekly check-in on NASDAQ relative to S&P 500, and we're still seeing significant outperformance to the tune of roughly 15% on the year. Through today, as of about 2 o'clock, it's nearly 16%, with QQQ up 8.65% and the S&P down roughly 7.5% for the year. So, we've seen those trends continue, and our weekly check-in still shows Q's outperformance.
All right, and let's go into our next chart here where we look at the individual performance of the Nasdaq-100 constituents. Are there any trends that you can discern from this?
Yeah, it was an interesting week in that QQQ, fairly up S&P 500, 2.06% versus 1.9 on the S&P. But as you're looking at sort of best performers within QQQ, you can see a lot of names that had been previously beaten up, and frankly, we're looking at the leisure names. Names like Expedia, names like Marriott, names like Booking, each one of them up over 10%. And I think a lot of that is around optimism around a potential economic reopening, as we've seen various states across the country begin to reopen in various stages. Some are full reopen, some are retail only, and obviously that's going to be on a state-by-state basis. But you're seeing optimism around that, along with a potential vaccine from Moderna. Now, they released pretty positive preliminary phase 1 details on their vaccine. But in terms of the actual details, it was pretty sparse. So, news around that was mixed. But I think as you're looking at number one, the movement towards reopening the economy, and number two, a potential vaccine being out there for coronavirus, you're starting to see investors pick at some of the names that had previously come under some serious pressure.
All right, in our final chart here, we're looking at revenue, earnings, and dividend growth outperformance in the Nasdaq-100. And this follows on to what we were speaking about last week, how Nasdaq-100s really do invest into R&D spend, which translates into future growth. And we're seeing that on the chart.
Yeah, that's absolutely right. I mean, it's a perfect follow-up to last week because, generally we always have a hard time quantifying, innovation. But we look at it from an R&D spend. And with that, how much of that R&D spend comes down to the bottom line of these companies. And as you can see in that chart, kind of the yearly refresh, it's significant. On a sales, earnings, dividend basis, you're seeing growth that's exponentially higher than S&P 500 and Russell 1000 growth. So again, the theme here is that commitment to R&D does trickle down to the bottom line. These are not really the technology stocks of the past. They're the 21st century industrials. They are committed to that R&D. They're bringing out innovative new products, innovative ways to make money, and frankly, innovative ways to the bottom line and deliver that to shareholders. So you're seeing that consistent commitment, and that's translating into those companies' performance.
All right, Ryan, thanks so much for joining us on Trade Talks.
Thanks very much, Jill.
And thank you for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.